Well, it's certainly been a wild month for some big tech names trading, and we are seeing the sell-off continue today. When you look at the sector as a whole, off about 2%. Apple, Alphabet, Netflix, all the big names down today. I want to bring in our next guest, Eddie Ghabour. He is a key Advisors Group and also author of Common Sense Bull. Eddie, it's great to have you on this Friday. Just give me a sense of where you see this market action going. You know, we've talked about the pullback in tech, and yet every time we talk about the potential for a rotation into sort of cyclical and value stocks, that there's a piece of news that sends investors back to tech because it's so defensive. What do you make of the pullback we're seeing today?
So I think this pullback is a combination of two things. Number one is I think people are getting nervous right now where we are in the market as we approach an election season that could cause some more downward spirals, as I can touch on. So there's profit taking there, which I think is prudent. And I also think there is a true rotation that this time is not a head fake. And I think over the next 2 years, we're looking as value as having potentially more upside than technology, as long as our economy continues to slowly grow once we get through the election season. So it's a combination of profit taking and a rotation that I think is a real rotation this time.
You talk about the election risk there and the potential for, in your notes, you point out a 10 to 15% drop in the market. Is the risk really just about not having a declared winner on election night, the questions around the credibility of the results, or are there some risks here that we're overlooking in the policies of a Joe Biden or a second term for President Trump?
I think the bigger thing for that call is if we don't know who wins the election right away. If this takes weeks for us to figure out, the one thing the market hates is uncertainty. And so if we have uncertainty in who the leader of the United States is for several weeks, I would anticipate a 10 to 15% drop in the markets, because again, with the markets having the upside that it did, that's why I expect the next couple of months to be choppy, more profit taking, and people are going to wait until we see what happens on election night. And if you've got dry powder, I would keep it until after the election, because if we see that drop, it'll be a great opportunity to increase your exposure if you have that risk tolerance.
So maybe put some cash aside, especially given how choppy things are going to be over the next 60 days. What about those investors who already have their money in the market right now? Where should they be rotating to? Where can they hide out with that expected volatility over the next several months?
So if you've been fully invested in equities this year, especially if you're overweight technology and you haven't taken any profits, again, everybody's situation is different. I think you'd be crazy to be fully invested heading into this election. So I would take a little bit of profits. I would use the barbell approach that we're recommending for our clients right now, where you still have tech as a core holding, but start rotating into the places that have been out of favor, you know, like the industrials, like look, there's an ETF, VYM. It's still down about 11% year to date. The value companies have still a long way to go to get back to even. So again, if you have the right risk tolerance, there's a lot of upside in the recovery stocks. And I think investors should be rotating already if they haven't.
We've had a number of splashy IPOs over the last few days, and I'm looking at where they're trading right now. You look at a name like Snowflake, it is up about 3% today after seeing that pullback yesterday. And then a company like Sumo Logic, which had a splashy debut, also pulling back as well. Where do you stand, especially with some of these cloud and software names that have come to market? It seems like there's significant appetite, but it also points to some volatility. Is that a place you think investors should be putting their money right now?
Look, I'm a little bit nervous when I see a company like that IPOs and doubles overnight. It kind of reminds me back to 2000 during the tech bubble burst that we had. So look, I think the technology space, the cloud space, artificial intelligence is the future. But I would rather put my money into a proven company that's not as speculative, that has a good balance sheet. You may not have the big upside event initially right away, but I think your default risk is much less that way. So call me a boring investor, but I like a proven company with a good balance sheet.
Yeah, Eddie, you've pointed to a lot of risk to the downside, especially given the run up to the election. What's the upside surprise here? Does it really come down to some kind of stimulus bill being put forward? Are there other triggers that we should be looking for that could potentially surprise?
I think the stimulus bill is the only thing we can get between now and the election that would cause markets to spike up. And if we do get a surprise stimulus bill, that will be very good for the equity markets short term. I think the closer we get to the election, the less of a chances we have in regards to stimulus, because the market's already seen the economy improving slowly. So that's priced in. The Fed is priced in. Right now, the market is waiting for stimulus. And if we don't get it, this choppiness is not going away.
Eddie Ghabour, Key Advisors Group, great to have you on this Friday.
Thank you. Have a great weekend.